I know times are tough, but I've had enough. I'm moving on. I'm moving on. I know times are tough, but I've had enough. I'm moving on. I'm moving on. I'm moving on.
Hello, everyone. How are you doing today? I hope you had a good session so far. I hope you had a good week so far because don't know if it's getting any better. I really, really love and enjoy the price action we are having these days. So before we start, I have a little real life brother. He's also here in the chat. And he decided to help me a little bit with the project I'm doing with you guys. And he's the guy who's making all these nice new thumbnails and the videos and all of this stuff. He's editing everything for me. So give him love in the chat, please, because he deserves it. It's just amazing stuff he is producing every day, and it's really good. La Familia. Oh, yes. My little brother and me. Love you, brother. Okay, so what you want to do today? I heard today like a lot of people wanted to go over the price action of the last days. We can do some backtesting. Like, what would be your idea? So maybe we can start a poll if we're doing just price action today, and then explain a little bit more to relationship of the DR sessions in between. Or are we gonna do just like a backtesting the last time? The retirement setup, yeah, we will figure it for sure because the retirement setup is many times there. There are a lot of stuff which I want to explain before we start, either if we're going for backtesting or not. But I will go over the retirement setup also. Rejections. ICT relation, no. Like ICT, I don't want to teach ICT because there's so much content out there. So if you want to understand ICT teaching, he has like 100s of videos which you can use to really educate yourself. And there are a lot of good people. For example, in my Discord, you have Danny, which is a ICT charter member, and he's really, really, really good when it comes to explaining ICT models, and you can ask him. So no, I don't want to do ICT relationships. This is DR, my friends. Nothing else than DR land. A little bit with ICT mixed in between. Okay. Okay, so I have seen, I just start somewhere. I don't know, like from the mods, maybe somebody can make a poll in between. While I start to explain, it would be nice if somebody could make a poll who is mod. And what I've seen today on Twitter is that a lot of people were saying like retirement setup in Euro USD. And I want to go over that for a quick example because first of all, the high impact news session I have given to you, they are for the equity market. So it means they are for ES, Dow Jones, and Nasdaq. So currencies, gold and other stuff, they have other impact news. So you need to figure out, for example, today, as you can see, the news and the volatility we had both times between 8:30. So we had news at 8:30 and we had another news coming at 7 New York local time or 10 o'clock New York local time. So as you can see, it has much more impact today than it had in the equity market. So whenever you're trading Forex, you have to be aware about the high impact news. So I can't give them to you because I'm not a Forex trader. I literally don't care about Forex. So you need to figure out which news are more important for the currency pairs or other assets. So when I talk high impact news, I'm talking out of my view when it comes to equity markets. You have to understand that. So, and that's also like, that's what we see normally really when we have high impact. So literally everything what is happening during a high impact day. So the levels, they stay, they keep on being important, but the market or the algos which are operating in this market on high news days, that's a different model. So that's literally a different algo which is working here. They are more likely going to sweep liquidity on both sides on these days. So you have to be aware about that. So there was no retirement setup because the news what we had today for currencies are high impact. So you always have to expect both sides to be taken out of the DR. You have to understand that there are other algos during high impact news events. It's the algo is getting changed. They are working on a different methodology than they do during the normal days. So there is news today. Don't text there is no news today because like then I really have to question you if you understand what you're doing because today we had at today, so that's my time. So we had consumer confidence, for example, home sales and all of this stuff. So that was exactly at this point, 10 o'clock, which is here 7 o'clock, that's Dubai time. So this was the spike up here. And this was the 5:30 news today. So you really have to be aware of what you're doing when you're trading. So don't tell me that there is no news today because like it's very obvious here. It was even said in the Discord, Nindo told everyone we have news 5:30, which is 8:30 New York local time, and we have news at 10 o'clock. So that's just what I wanted to say. If you look British pound, for example, it's the same, taking out both sides of the DR levels. So please, if you trade anything else than the equity indexes, you have to be aware about the news which are coming out. Yeah, just simple. If you don't know which news are important or which news can make such a movement, then just better be careful instead of jumping into something which can weep you out to the left and to the right, okay? So you can see it also here, DXY also, even in the ODR, we taking out both sides. We are doing the same in this one now. And also pay attention to the overall price action what we have. So, I mean, you can see that this is like sidewards, and like even here you can see we have, what do we have here? Everybody who watched the part 3 video of the DR. So what is this? ADR small, ODR expanding. So what we are expecting, exactly what we are seeing here. So don't tell me you can't see that, because then you haven't watched the part 3 video, because that's a model I have explained there. This is range expansion model, and range expansion model means exactly the price action we are seeing here, which is like expanding, sweeping, sweeping again, sweeping again, sweeping down, coming up. So that's exactly the price action which is explained. Yeah, exactly. In German, keep this in mind. In German, it's Trompete kostet Knete. So schaut's aus. So trumpet will cost you money normally for normal traders. If you know DR, you can make money on those days. So that's about currencies, what I have seen today, which I wanted to talk about, that you have to be careful. Let's have a quick look at gold. Same, seems to be also more sensitive than the equity markets for the news. So also same, what we are seeing here. This is a beautiful, like inside the range, down, up, down. So it could technically come down here and then continue upwards. It's telling you so much. Like when you see the session, the DR session inside of this big session, that's in 99% of the cases. This means you're gonna have a correction in this level. So whenever you see that, that's so, you can expect price, as long we stay inside here, that this is correction, and this could be a Tudor swing to the top side, and we could go below this double, this equal low here, what we have here. So this is like very, very easy to spot when you have such a DR session and then everything else is happening inside this range. You know we are range bound and we're gonna go choppy, or search and destroy, I think ICT calls it. So search and destroy is for me simple. We are sweeping to both sides and we are doing a correction before price most likely will expand to the upside on the bigger picture. So you see this beautiful here, zack, zack, zack. So we're coming from here, same model like we had over here. Inside this big range, no expansion to the downside. We finish here, we go small. That's what we have seen today in S&P, by the way. And then we expand into the next leg. So price is never moving like this. I mean, that's really basics. I think I don't have to teach them. Price is always having movements like this. So we go up one leg, then we are going into retracement or correction, and we go further up. And that's exactly what you see here. Up, up. So that's as much I can tell or say about the other stuff today. Let's have a look at Bitcoin today. Well, even that, I mean, everything is already written here. I don't even need to look closer into what price is doing. I'm just, my first eyes or my first look goes into how the DR session are forming, and it's telling me with 1 million words, okay, this will be choppy. Because I don't see any expansion. Like here, we are expanding this range, like this range. Like we are getting bigger from the ranges, from the DR ranges, but we are staying in the same area here. So yeah, it's quite obvious to me. Okay, so far so good. Still, we didn't have a poll yet. Okay, I'll make a poll by myself quick. Umfrage. Backtesting or Yeah, we'll talk about tick grid in a second. Weeks price action. What do you want to do? Okay, here is the poll, and while we are waiting for the poll, we're gonna switch to SPX. And we are adding, for those who don't have it, it's called the tick grid. It's this script, tick grid, the master. So you add it simply. I like it in black all. So, and then you switch to like the best use case is in this case is the 1 minute chart. So let's look at the SPX price action for a second. So what the grid is telling you is the climate between buying and selling stocks on New York Stock Exchange. There is another one which is called Tiki. That's for NASDAQ stocks, but we are looking at tick because we want to understand, like I want to understand when I use this indicator, how is overall selling and buying happening on the New York Stock Exchange. So the indicator makes a very simple calculation. So he's taking every stock on New York Stock Exchange and compares stocks which are upticking, so where the price is moving to the upside, and downticking, where the price is ticking to the downside. And then he's just subtracting them, and he's getting a delta of how many stocks are right now upticking or downticking. So if we look at this right now, so right now we have 80 stocks delta ticking to the downside. So it's equilibrium in terms of buying and selling of all the stocks on the New York Exchange. If if the indicator goes above 6 to 800 ticks, it means 600 stocks are upticking. So it means, like you can simply translate it into 600 stocks are the effective delta, 600 stocks are getting bought right now. And the same if we go into the lower level. So when we're in the lower level, that means we are selling 600 to 800 stocks net on New York Stock Exchange. So how to use it? There are two ways to use the tick grid. So first of all, you're looking at the extremes. So these areas which are green and red. Yeah. So whenever this one goes above this area, the high or the low of the indicator grid, it means it's most likely that we will see a retracement or a turnaround in the market. Because it means like mostly every stock on New York Stock Exchange in this minute is bought. So it means like you can expect that at one point we will see a retracement. As you can see here, the extremes of the tick grid are matching the highs of the price. This is happening in real time, as you can see. So it's not repainting anything. That's just really confluence in the 1 minute chart. So you can use this to say, okay, I'm looking for an entry to short, for example. That's very example I explain. You should not only use tick. But let's say you're looking for a short and you see these extreme readings here. That could be the point where you say, okay, I'm looking for a short. I want to take a short trade. This is most likely the best point to enter a short trade. So what else is this telling you? So if you have this extreme to the upside, and then you see price almost coming down to equilibrium again, and price is not really moving, it gives you an idea how strong the trend to the upside is. So if TIX is coming down to this, you only see a little price reaction over here, then it means that most likely short is not the best idea. So tick coming from one side to the other side, it should really come down much lower than it does in this example. So this gives you an idea, okay, we go to extreme readings, price coming down, but price itself is not moving a lot, so that means it gives you confidence that long is most probably the favored direction. And the other use case you can do is looking for divergences or SMTs inside the tick. So as you can see, price is moving like this. So we are creating higher highs, while in the tick chart, we don't have that, we don't see that. So even though we are making higher highs, yeah, this one is correct, but like here we see a new high, but the tick is not reaching this level anymore. Same with this high, tick is not reaching this level anymore. So that gives you an idea that most likely we will go at least into a retracement because the stocks are not confirming the movement of the index, if that makes sense, yeah? And you can do it to the same, with the same direction to the downside. So when price is coming lower and lower, so this is the low, price is moving like this, and tick since that point is not reaching new lows anymore. So first of all, up to this point, we are making a new low. The low is not matching the lows of the tick indicator. And now look what is happening. We are going up. Price is not making a new low below this low. So price stays above this low, while the tick is moving. Here is the high, here is the low. So this is the low, which is matching this one. So price is not making a new low, but still algo is driving it down, but it's not bringing it below the price. So that's a good indication for algo or price wants to go lower, but it's not having the backup. So we are making a new low here. So technically more stocks are selling, but price is not making a new low. So then we go higher and higher and higher. So this was the low of this low. And look now price action. We are going up in the tick. And again, algo is driving downward. So because you can see that more stocks are sold at this moment in the chart. So, but price is not really reacting. So you have another SME over here, which can help you to determine which direction we want to go. And then we go up and we reach the extreme again. So that tells you, okay, once we reach here, we will see a retracement. And that's what we are seeing right now. No, it's not. It has nothing to do with RSI, but like technically from how you use the model, yeah, it's kind of similar. But like this is real time, as you can see now, 400 minus ticks, so that means like net 400 stocks are sold to the downside right now. So and once we reach this level, if you're bullish or if you would look for a long entry, you can look for an entry when we are reaching the lower levels of the tick reading. If you have a strong trend day, you should not look at this because like on a strong trend day, we are always coming back to the middle line and then bouncing from there. So it's not really good. You need to know in which direction you want to trade. Because just because we reach the high, it doesn't mean that price can't extend higher. We can go a little bit down. So it's just a little bit more confluence if you're looking for entry. So I'm using the tick only really if I know I want to trade in one direction and I know at which level. So for example, you have a volume imbalance, etc., or you have a level where you want to enter and you really want to fine tune your entry. Then you can use it. Like let's say I would be planning to use this gap imbalance here, volume imbalance over here for an entry. So let's say I want to look for an entry here because my buyers and my DR is telling me I want to go long. So that would be the area where I think price should retrace to. And then looking at this point, I'm looking at the tick. And as you can see right now, we have a new low. So that could be a possible entry for me if I want to take an entry here, because I see I have double confirmation. So we have closed the volume imbalance over here. I'm looking for a long entry and the tick is at the extremes. So I could take an entry here or wait till we go down here and see if price is reaction and the tick is going up. So you can use this as a third confirmation to whatever you want to trade, and looking for an entry in the lower time frames. Very important. This one is only working because I've seen people using it in Euro USD or trying to use it, or Bitcoin. So this one is really only working for stocks, or equity indexes. It's not working for anything else. So you can't use tick for Forex, for example. I have a Bloomberg terminal, yes, but it's horrible. I have Icon, I have Bloomberg, and I have CQG. Mainly all of them, I'm using them only for order routing. Okay, so let's see how the poll is. Any more questions to? Any more questions? That's just like an overview. I most probably will make a video about the tick and how to use it. But I think that for now that should be enough explanation. It's called tick. Just go into TradingView indicators and type in tick, and it's tick grid the master. That's the script. It's very easy when to use SPX. Like I'm always looking at SPX because it's the cleanest price action. So if you don't want to see all the noise, which is done overnight with ADR and ODR, you just look at the SPX. Or when you want to look for really clean price action during the regular session, you can look at SPX. Else, you're gonna look at ES. But you can use the tick grid also in ES. It's not a problem. Now, I'm not using DXY as correlation for my trading. I'm like me as a trader, I'm very confident in the tools I'm using, so I don't want to confuse myself too much. Literally, I'm not even looking at at Nasdaq. I'm not looking at YM when I'm trading the ES. I'm literally only looking at the ES because I don't care what the other do. I have seen so many days where I could have made a crazy good long trade in ES, and on the other side, I could have taken a short trade in Nasdaq. So you have to understand that every index contains different stocks. So the S&P 500 has different stocks than Dow Jones 30 and different stocks than the Nasdaq. So yes, they move overall on the bigger time frames. They most likely move in the same direction. But the internal structure, especially if you look at the 5-minute and you're trading DR, IDR, which is like defined ranges, time ranges, it doesn't matter. They can do opposite and still go into the same direction. I mean, if we look today at Nasdaq, for example, so Nasdaq made a new low, broke out to both sides of the ODR, and then just did what the other twos are doing. Same, let's look at YM, which is Dow Jones. Oh, Dow Jones is very clear. So yeah, so literally today, only Nasdaq was doing strange stuff, and the other two. That's also the reason, guys. If you're new to trading, if you're not like a seasoned trader for many years, you should trade the ES. Stay away from Nasdaq, stay away from YM, because one of those two will always make some crazy stuff. So either the Nasdaq or the YM, they are doing some crazy stuff when it comes to expansions or to sweeping stuff. It's in 99% of the cases, the ES is the one in the middle. And for me, it still has the best and cleanest price action, even though statistic-wise, NQ is a little bit better for DR. But if you're not really experienced, stick with the ES if you want to trade equity. Yeah, I'm looking at Nasdaq right now. And that's the Nasdaq. So, I mean, like, but even if you look at the Nasdaq, so if you combine what I told you in video 3, it's a very simple stuff over here. So we have a gap over here. Look at this. This is happening from last night to tonight to the opening. So we fill this gap and then price continues up. We are sweeping again, going below this level. And that's it. So you don't have this price movement in the other two. So this is like what is happening here. The algo in Nasdaq is just sweeping low after low after low. But at the end of the day, this is like a box. So we are moving nowhere. You see that? So it's just collecting liquidity to the sell side and just to go up then. But that's what I mean. Like if you look at YM, the other two, if you look at YM, not doing anything like that, not even sweeping this low, not even closing the gap over here, stays open as it did in SPX. So, I mean, YM, I don't see, because somebody was saying that YM or Dow Jones was complicated. I don't see any complicated here. I mean, get our first long confirmation over here, rejecting from the 50% and the opening price, going up, going down, rejecting from the low, going up, coming back, getting rejected here, coming back, returning over here, and goes up. So YM is really nice. But the nicest today is ES. That's why I like it. Okay, so what was I think it was backtesting, right? 53 backtesting, 46% for... Okay, let's do it the following. I mean, the price action today and yesterday is very quick explained. Let's go over this for a second. And then we're gonna go for the backtesting. Is that okay? Bit of both, yes. Everyone fine with that? Great. You get the volume imbalance you find everywhere. You find them in SPX and you find them in ES. So I mean, like if you go into the study channel in the Discord, you will find that all is there. But like, let's go over it. So we are coming. Last week price action was quite nice. So that's where we see what we've seen in Euro US dollar. So that was Friday price action. So we literally stay inside of here, and then we are opening Monday. We are extending to the downside quite easily. So Monday's price action, I can't even say a lot of, I mean, this week was just crystal clear. I mean, that was Monday. So we are going down, we are rejecting very clearly from the high IDR levels. We are going down, you're getting your confirmation. We are going up, you're waiting, we are going down, and we are rejecting 1, 2, 3 times from the DR levels. Latest with the third time, you should be short. Stop somewhere 2 ticks above the IDR levels and you write this baby down. It's almost impossible if you have understood what I'm teaching about DR, it's almost impossible to lose money. So if you lose money on Monday, you really have to go back and study. This was a day for free. This was a freebie. That was like everything is on the house. It can't get clearer. One, I'm zooming in. So here's your confirmation candle. It goes up, you don't see a rejection over here, it goes down. So even then, getting confluence. So what we have here, we have a volume imbalance. So if price goes down and you have that and you have a confirmation to the downside, what do you expect here? We are rejecting from the 0.5 levels over here. We are going up. We are filling the volume imbalance. And we are rejecting 1 time clearly, 2 times clearly. So let's say you don't want to take this trade. Going down, we are coming up again. What does price do again? Rejecting exactly to the tick with the wick from the DR level. But look closer, look really close, guys. It's not only after filling this volume imbalance, what does it do on top of the rejection over here? Price never, after getting filled, closes above the volume imbalance. So you have one rejection, goes up, goes down, comes up again, rejects to the tick from the DR line, and is not able to close above the volume imbalance. Price goes down again. We are coming up again. We see rejection first from the volume imbalance and rejection again from the DR level. So that's your point where you don't have to think anymore. I mean, stop waiting. You will never get 100% when you're trading. There is a point where you have to say, okay, price have showed me enough. Now it's time for action. It's like you're going out with your favorite woman or girl, whatever you are into, and you're sitting there and you're having a nice dinner. There are candles. She's smiling at you. She's looking into your eyes. And there is a point where you have to make the move, my friend. There is a point where I have to say, okay, now I'm taking all my guts together and I'm going to give her a kiss. I'm going to touch her hand, whatever. At one point, after you receiving enough signals, you have to take your luck into your hands. If you're not able to do that, don't even ask me. Because if you can't take action when you see price developing, I can't help you with that. That's something which goes way, way deeper. This is something to do that you don't have enough confidence in your own trading style. At one point, you just have to shoot. And like with the woman or with the girl, maybe you interpreted her signals completely wrong and she's slapping you after you try to kiss her. But that's life. Yeah, you will never find out if you never try. And the same with the trade. Latest here, you have to press the button. I mean, if the woman rejects you, fine. Happens, then you know that, okay, I was maybe wrong and I interpreted the situation wrong. But like, you have to try because else you will never know. She will go home and she will think, oh my God, what else should I do? This guy is an idiot because how much more? I smiled at him, I showed him that I like him, and he didn't try anything. So maybe she's even thinking you don't like her. So same with price. So this third rejection from up here is just simply where you at one point just pull the trigger, you take the IR as a stop level 2 ticks above, and that wherever you want to put your price target, we reached already 1.5, so I would suggest to take the next standard deviation level. So that's 4R, and these 4R, they are for free. Like Monday was a free day. Market giving away freebies for nothing. So that's Monday. So we are closing exactly at the standard deviation of, where are we? The 2.5, the minus 2.5. So that will be important. Mark this level because that's the reason why there is something. This is minus RDR 2.5 equal with what? What is here also? The low of the day. Exactly. So keep that in mind. So we are going down here, we're going up, and then we have our ADR session on Tuesday morning, or like Monday night, New York local time. So we are opening with a gap over here, which is not getting filled. So price goes up, price gets rejected 1, 2, 3, 4 times, right? So let's say you don't know what is happening, but just look at the price action here. So what is your idea? Which direction you would like to trade into? Don't discuss women, it was just an example. Listen to what I'm telling you or talking about. So this is clear, like this is slightly short favored, right? So market doesn't give you a confirmation, and like, I give you a trick. Whenever you see, I know there is an early indication in here, yeah? We're all aware about that. But look what is happening. So we take, this is the first, or this is the early indication from close above the IDR. Look at the rejection from price. It's not only rejecting and closing below, it's immediately taking it back. And there are a lot of videos where I'm talking exactly about that. Price taken and immediate rejection with a candle which is bigger than the candle which is closing above. That's always something where you should say, okay, I'm careful now. That is not a sign I want to long right now. So then we see return to the standard deviation also from Monday. We are rejecting again and again. Price tries to go above. And what we see again, we see the same. Bigger down candle than the up candle, which is closing up here and going down. Then we not even rejection from, we don't even see a clear rejection over here. It stays here, it stays here, it stays here. So no trade over here because we don't have a confirmation. If you're advanced, you could take a trade directly over here, but like I'm not suggesting that. But then after this here, so you don't want to go long, we are breaking down. So we close the gap, as you can see, we are coming down and we're going up. And here in this candle again, you see a clear rejection. So if you would have not taken a trade up here, that would be a potential entry point, because look what is lining up with this gap like magic. Look at this line, which is what? It's the 0, it's the minus 1.5 standard deviation from the RDR. And look, if I remove this one, look at it. And look what is price doing exactly at this line. Look at it. So we are tracing, nice retracement, up exactly to the 1.5 standard deviation level, which is like magic, aligning with the gap levels. It's exactly, look at this. So that's definitely an entry where you could have shorted over here, or at least try a short over there. Target would be new low and even a new standard deviation. But that's not the trade you have to take, but that would be an advanced use case. So price goes more down inside the ADR session, right? Again, look at the standard deviation level, look how price is rejecting it and using it, and we are closing below and we immediately take this. So -4. So now I want you to take a look. Now we are getting getting a little bit messy, I guess, but that's okay. So now we are switching into a daily chart. So we can't see that. I have to remove all my stuff here. But like, do you see this volume balance here, imbalance here? So if I draw this one out, and now we are going back into the 5-minute chart. That's all in the study channel, by the way. Just showing it here again. So look at this. So if you look into the study channel, you will also find that it's exactly matching. There is another volume imbalance to the left. So that gives you confidence in terms of, okay, that could be an important low. Yeah. So you just go into the daily and you look here. Anyway, you don't have to look at this, but like, if you want to get advanced with DR, you should take this into consideration. So anyway, price goes down, we are expanding to the upside. Now the DR is forming. No trades to be taken here, but again, look at this 3.5 standard deviation and look where our ODR levels are forming. Look at this. It's to the tick, right? 3.5 standard deviation level aligns with the DR level and the standard deviation level. So, but we are not taking a trade here. So we go up and look where we are rejecting from. Look what is up here. Here is the minus 1.5 standard deviation level from the RDR. Surprise, right? Random. Anyway, we are getting a long confirmation and price goes up. And look what is up here. Here is the DR low from the ADR session, right? So price rejects from here. Clearly, right? Rejection, 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 rejection. We go down. Here is a volume imbalance. We take it, we go immediately, we stay above it, we go above. Where are we rejecting from? This is our DR high. Rejection, rejection. So we go down, we go up, and we go down. And what we see here, so here we have two things. We have the 2.5 standard deviation and the midline. We have a volume imbalance over here and we have a volume imbalance over here. So price comes down here. You don't take a trade over here. You wait. Market comes here, clearly, as by magic. Oh, 1 tick difference, bad market. So 1 tick difference rejects back, closes above here. Next candle, market comes down here, rejects where? Exactly at the volume imbalance. And goes up again, closes above mid open price and standard deviation 2.5. Goes up, stays above. Here is your entry. That could be your entry. Long confirmation, that means I am looking for a long. New session starts, that's how it's looking like. So another trade which you could take. Also, what is this telling you? What is the combination of these two RDR sessions is telling you? And this model is very interesting. That's a model. It can happen to the downside and to the upside. And this model is telling you that we are having a high chance that this low could be a long-term or like at least a swing low in terms of market structure. Exactly this model, small ADR, big price expansion, and within the ODR and the RDR, we are taking this out. So this could be a reversal point in price action. This model is happening to the downside and to the upside. So mark this and look in the charts, and you will find at very important points of the market, you will see this model forming in the lows or in the highs. So next trade done. So if you enter here, you are already done before the session is closed, because we go up, and look where we are rejecting from again. Here. It's the same again. IDR low, RD. Rejection once. But you get already a long confirmation here. So we are rejecting from here. We are getting a long confirmation. And that's the call which I made live in Discord. So we are coming down, and where are we coming? We are having the -2 standard deviation level here. We have this beautiful volume imbalance over here. We have the open price over here from the RDR session. So 1, 2, 3 clusters of levels where you look how price is reacting. And what is price doing? We are coming down to the open price. Rejection. We are coming down to the -2 standard deviation level. Rejection. We are touching into the volume imbalance. We are touching again into the volume imbalance. And again, to the tick. To the tick. This one is not going below the 2 standard deviation level. So 1, 2, 3, 4 candles. The next candle is rejecting from where? From the open price of your RDR. The next one candle rejecting. So, and that's where I took my trade, and where I called everyone and said, okay, let's try a long over here. So, and you're not looking for a short. Whoever is looking for a short here doesn't understand DR. So I can't make it easier, as like it can't get easier. So here, confirmation close above the DR means look for a short trade. Look for a long trade, sorry. So your mind should not be even thinking about shorting something. So your mind should be focused on, where do I go long? And this is also like close to a retirement setup. So the retirement setup looks the same, because people still ask about the retirement setup. So price goes up, gives you a confirmation for one side, and then returns close to the other side IDR levels. And that's where the retirement setup is happening. So that the retirement setup is very easy. You don't look for a fair value gap. You don't look for anything. So as soon price comes over here, that's the retirement setup. You take a long over here, and you wait for either the other side of the DR levels or a new high. That would be your targets. It's a very simple trade to execute. That's all. So, but again, like this, I want you really to understand. I mean, it can't be better. Like if you want, draw yourself a fair value gap also over here. If you want more. Yeah. So, don't know. There's so much inside of here. It's just like, I don't know. This, I think I'm not like an ICT pro, but this is a breaker structure, I would guess. Or like this here in total is a breaker. Anyone charter ICT here? But I would say that's a breaker structure over here, right? Yes, breaker. Okay. So there is so much here which gives you this entry, but what it makes it so genius, what it makes it so amazing in my point of view, is just that you know you're looking for something long. You know, this breaker structure, this all what you have here, the order blocks, the fair value gap, they are important, or they are like for you extra confluence, because you know you're looking for something long. So you're literally scanning this whole area when price is moving in here for a long entry. So I can give you more. So price is coming down. and you know you're looking for a long. Look, we have another volume imbalance over here, and we have another volume imbalance over here. So volume imbalance means magnet to price. So at least when you take a trade down there, it's a high probability that we will close these volume imbalances. So it's so much in there. It's like a free trade, in my opinion. So long trade, wherever you want to enter, here, there. If you're more comfortable with bigger stops, you put it 2 ticks below the IDR levels here, and your target is a new high. That would be 2.44R for free. If you're like Nindo, you have your stop over here, which would give you almost 4.5R. If you're like me, you enter here, and your stop is over here, 2 ticks below the volume imbalance, and you can get like 13R. Depends on you. Setup is all the same. It's all how much confident are you in your entries. If you have seen my charts, I literally entered exactly here. This was my entry, and price was literally respecting my entry. Never came back there. I had this wick, which was putting me into minus, but then it's not. So let's say you missed this entry. Again, volume imbalance, volume imbalance. You missed this entry for whatever reason, you're not confident enough. It's all 5 minutes. Like, just look at the 5 minute. Don't jump time frames. Don't look around. Just when you learn and when you study, focus on the 5 minutes. It's the best time frame. So look here, 5 minute volume imbalance, 5 minute volume imbalance. You're not taking this trade. And I've seen many people taking this entry too. So we go up, and then we're having a retracement. What do we have here? We have another fair value gap over here. So again, we have here breaker structure, for example. But like for me, I don't need all of that. For me, just volume imbalance and the reaction from price. Fair value gap. Look what we are doing here. Look at it. Again, to the tick. So we are rejecting from here. So you could take another entry here and just go long over here. Same procedure wherever. Let's say you enter in the middle of the fair value gap. Your stop would be 2 ticks below the volume imbalance. Your target would be the same, new high, another 6R. I have seen people yesterday taking this trade, selling it here, taking this trade, selling it here. You don't have to be an idiot like me, because I was not happy with this one. I was waiting for the 0.5, and that made me stay awake till 6 o'clock in the morning. You will see. So, but that's the next entry. So let's continue. We go up, we make a new high. So that's where you take your profits, partial, whatever. But we are getting rejected again. Remember this line? Still there. So, but also, like, you are ICT students, a lot of you. So what is this also? What do we have up here? Equal highs. So what are we expecting? We are expecting that this is gonna be taken out. Then we are looking at our models, and what we are seeing clear expansion. So for the next session, we also expect that price goes up. So I took my trade over here, but my target was 0.5 level, which is up here. So I had to wait literally till the morning, like 6 o'clock it was my time, Dubai time, where we hit this level. So, but let's continue what we have been talking about. So we take a new high, price retraces back. What is down here? What do you see down here? It's another volume imbalance, right? What do we have here? our other volume imbalances. What do we have here? DR low ADR. So as by magic, price is going down, immediately it's taken out. Price tries to come down again and gets rejected exactly at the level again. We go up, we see a rejection from the IDR level. We are coming down, price is closing one tick below, immediately rejection. Price is trying to close again below it, immediate rejection. So this could be an entry. Then market goes up, we are opening with a little gap, and we are going up, again, rejection from this line. Going back, tipping into the gap which we have created, and from there market goes up, breaks this high, gets rejected with one candle, goes down, and then takes it. We are leaving volume imbalance over here. We are taking out the 0.5, that's where I finally got my take profit. And we are getting rejected now from here. That's the 0.5 level from the IDR. Rejection. Inside this standard deviation, we also have our ADR forming. So rejection, rejection, rejection. We're getting a confirmation long. So what are we doing? We are looking for a long entry. So price comes down to the mid-level. Nothing is happening, right? But what do we have here? I don't have it in my chart. But look at this. ADR high. So let's check. ADR high. Surprise. So fair value gap. Surprise. Breaker structure. Surprise. It's so much. I mean, that's why I'm saying this price action we are seeing here, it's just beautiful. It's art. It can't get any better. So we are rejecting from here. We are not able. We are taking out the sell side liquidity. We are returning now into the ODR. ODR is doing what? It's rejecting. Oops. It's rejecting from what? Again, IDR and DR low from the ADR session. I think that's where Nindo took his trade, right? I'm not sure if Nindo took it here, but like again, look at everything what is happening down here. Buy side liquidity taken out. We are not taking out this low. We are rejecting clearly from these levels, right? 1, 2, 3, 4, 5, 6 candles. So you could take an entry here. Target would be again a new high, and we will take it. Anyway, if you wait for the session to form, you get your long confirmation. We are taking out this high. We are retracing back. Look at the rejections over here. Rejection 1, rejection 2. Where are we coming back to? We are coming back to the mid-levels. One close below, look at it. One close below the mid area. What do we have also here? Another volume imbalance. I'm not drawing all of them out because I just see them with my eyes, so I don't need it to be here. But so we are going down, we are closing again. One tick below the mid. Immediately next candle goes straight up and closes again above. Next candle rejects again. Next candle rejects again. And if you watch Nindo's video, I think 50 seconds or something like that, you see how this was happening live. So you could really watch it happening, and the rejection, you could see it live. So I took a long there, Nindo took a long there, I took it in the third candle, and there is not much more to say except it can't get more obvious. So here your stop is 2 ticks below here. Your target is a new high. That's it. Session continues, we see a new high, and then we are starting again the same procedure. So we have again, I collected these lines and drew them, so I named them mid IDR, Monday RDR, volume imbalance, gap imbalance. Price makes a new high, returns. What do we have here? Very beautiful volume imbalance, which is telling us price will come back there at one point. Same here, same here. So price comes back to this volume imbalance, rejects, and goes below. Rejects directly from this volume imbalance, rejects directly from these three levels. You don't take a trade here, you wait, price goes up. Now you have structure break and whatever you want to see on top of it. Price comes down and look where it's rejecting again. To the tick, mid IDR, Monday RDR plus volume imbalance. If you don't take this trade, fine, wait. Next candle. Next candle is doing what? We are opening here. Now, DR high from the ADR from the same day. Rejection to the tick. So you don't take this trade, fine. You wait, we are going up, and it's returning again. Where are we rejecting from? Another volume imbalance. So again, 5 or 6 entries possible. You could take this if you're very confident. You can take it like me, taking this one. You can take the next candle and you can take the next candle. And even there, if you miss this one, you now have another fair value gap over here. Expecting price to expand, so you could even take this as an entry. So that's literally price action which we have seen today or this whole week. So beautiful. Here there's not a lot right now. I mean, there is a fair value gap over here. But I would prefer price to come down to the DR levels, so nothing for me. Yeah. So anything else about this week? I mean, like I said, like this week is free money. It's like the market is in Christmas mood and plays Santa because it's very obvious. So this model, by the way, and that's why I'm telling you to go into your chart and look. If you see that, so smaller range inside. So far what we have seen is the opposite. So range is getting bigger and bigger but stays in the middle. That's the range expansion. But this is an, like if you would go back and search this where the ADR is bigger than the ODR and the ODR stays inside the range, I call it the contraction model. And contraction means that it's like a spring. You're pressing a spring and at one point when you let it go, it's gonna jump. And that's exactly what this model is doing. It's really happening very rarely and normally in a strong trending phase. And literally what is happening we see afterwards. But I don't understand when people just ask me everything. I mean, when you see that in your charts, you should go and look in your chart and look if you have seen it before. I can tell you it didn't happen the last 4 or 5 weeks, this model. because it's really rare that it's happening like that. But like if I would be new, if I would be a new student, I would go and look into my charts and look where I can find it and see if there is any correlation. Crude oil today, clean retirement setup. Yeah, we can have a look at this quick. So that's it for this week. I mean, it's just beautiful price action. And I hope everybody understand there's so much. And if you listen closely to me and if you understand what I'm talking about, you see all the, like, it's not only one thing you see. And that's like where DR becomes the ultimative tool, and even more ultimative if you combine it with ICT, because it's not only one setup you're getting presented, it's like it's a ton of setups. It's not only one candle where you can enter. It's giving you 1, 2, 3, 4, 5, 6 setups to come into this move. And this is what it makes crazy. And I see people now slowly getting the grasp of the power. Like what I explained with you in my first video, that was just like let's call it, this yellow books. I would call it DR, IDR for dummies. I give you a rule which is easy to follow. But this one is the next level step. Combining, understanding the relation between the sessions, understanding that the levels will be always important. The levels will be important. And using the bias, directional bias, which you are getting with confirmations from the DR session, together with the levels, together with ICT, as I showed now, from breaker to order block, whatever you want to use, doesn't matter. Volume imbalances. Me personally, I'm quite fine. I see all the other stuff, but like I'm not a big breaker block. Like I'm not looking at this every day. I see it, but like this is enough for me, because like this concept, this confluences which I can add with volume imbalances on my DR levels gives me just so much power that I can't do anymore. It's like enough for me. Everything else, because people are asking for DXY or something like that, it would just confuse me. Why should I look at DXY now? I mean, I don't need it. Look at this. Actually, very ugly price action. I don't even want to look at it right now. But like, you have to understand when you're trading a model like DR, and that's maybe where sometimes people get confused about. Like, we are splitting the whole trading session. 24 hours of trading, we are splitting into 3 DR ranges, right? So we are working inside how the ranges are forming and how they are building up. So we are literally taking a snapshot, and I showed it last time in backtesting, where I was not able to look at any higher time frame. We are looking at snapshots, so it's completely fine to just look at it. I don't need to know where the next big higher time frame goal is. I don't need to understand this in the first place. Once I learned everything, once I understood how everything is working together, then I can start and look at maybe confirmations or correlations with other instruments, or higher time frame, big term, long-term goals or something like that. But at the point right now, I would be focused on learning, understanding this, because that's all what you need in the beginning. And I see people now, it's not even been 4 weeks, left and right, people are starting to understand what they can do. And all of a sudden, people who studied a long time, other concepts, were able to come to the point to say, okay, now I finally found a way to decide in which direction I want to trade. And that's most probably the biggest factor when it comes to the DR. It's like a traffic light. It's either showing you green or red, or it's showing you yellow. And that's the most amazing thing you can have in trading, because it's like if you would go into a casino and play roulette, So the DR is telling you bet red or green or stay out. And that's like you have to get this into your head. And like the numbers, that's not even something I have to explain you. You just check the numbers. The numbers are speaking for themselves. It's just such a cheat code in terms of understanding which direction you look for trades for. Okay, that's it this week, and it's already 1 hour 15. So I think we're gonna have to move the backtesting because that's gonna be model. Model is, by the way, a nice name, but what do you want with the Euro USD all the time? So what about like tell me something I should look at or like something I should explain? Um, or you can ask me any other question. Like for me, good question. So somebody's asking when volume imbalance would be considered invalid. As you can see, like even like there is a point, like I make a differentiation between volume imbalance and gap imbalance. So gap imbalance is literally, you see this candle is closing. So this candle is closing here, the big candle, and then we are opening up here. That means that there was a gap. So that's why it's for me, it's a gap imbalance. And the wick later on, while this candle is forming, is closing the gap. While the volume imbalance doesn't have that. So you see this wick is covering the price range and this wick is covering the price range. So a volume imbalance should be either filled, like I have a rule of thumb that you can take like approximately 3 bodies inside and in a strong market. So this one, like for me, literally turns into an area where the price don't wants to come back to. So because this is filled with the wick over here, so that's like a barrier where the price should not, or like the algo is not interested to move there for now. And the volume imbalance, price will return to this because there is price efficiency, inefficiency. So the algo or the algos from the SLPs, they are all paid to make price efficient. That's their main job. That's why they are liquidity provider. You wouldn't need liquidity provider if you don't want to provide liquidity, and that means price efficiency. So that's why the volume imbalances are always a point where price will return sooner or later. In most of the cases, it's happening quite quickly. As you can see, like literally every volume imbalance here in this whole price chart was filled. And you can use them as like extra confluence. So if market comes down here and you see this volume imbalance, you know, if you just would see it like this, so you know when you see these two candles that price most likely will come up here. So you see you have this one, it's getting filled, and here same. Price comes down, fills this one, goes down, fills this one, goes down, fills this one. But we still have this up, so you would know if you're bullish, like that gives you extra confidence that price will return to the level. And that's exactly what we see. So after filling all of these volume imbalances, price extends and closes this, and there we have 1, 2, 3, and then the same function could be, or like the function is the same. Once the algo considers this area as price efficient, it's turning into, yeah, I almost want to say like support for the price, but it's the wrong word. I can't tell you the real word. So the real word, how it's called in the algo language. Let's call it just like let's make it easy. After the algo considers this area to be price efficient, it's turning into a no-go area, no trespass anymore, most of the times. And the same is happening with the gap imbalance. That's why I'm working on an indicator right now because there's no good indicator for volume imbalances, and especially not an indicator which makes a difference between the two forms of it. So anyway, volume imbalance was also explained from ICT. I just know a little bit more to this area because I know what the algo is seeing there and how it's handling that. But like, this difference for me is quite important if it's a gap imbalance or it's a normal volume imbalance, because algo sees it differently. But for you, just on your normal trading day, like I said, like just look at price and how it's happening. So we are coming down here, we are feeling this, you know you have another one down, but you know already price should be coming back here. So you should expect the fill of this volume imbalance. And as you can see, we don't have three bodies in here. So then we have another wick and another wick. So now you can say it's like three body fills. It's very hard to quantify, but rule of thumb, yeah. And then we have all these three imbalances are filled, which were happening over here. This one was filled and turned also. So we return, we go back, we go up, and now we are filling this one again, which we why we were going into the down move. And here is another one. So then price comes again down, goes back into this imbalance, goes back into this balance, fills it again, and then we are rejecting again. So, and then we are filling this one. Then this one gets filled, and now it's like a no trespass area for the algo anymore, and we are lifting off of this one. So, and as you can see, like sometimes price action doesn't have this imbalance. So what is happening, these imbalances are happening because the algo wants to ignite the momentum of price action. And whenever the algo tries to move price into one direction and it's not backed up by other people or other market participants buying, you will see these gaps. They are just happening because literally price is not efficient in this area. As long like most of the market participants are in this area, if they are on the same track, so on the algo track, they want to sell like the algo wants to sell, you would have not this gap. So when you look at this price action now, most of the big players, hedge funds, whatever you want to take, most of the participants in this move are aligned with what they want. So we don't build any volume imbalance in here. So the first one we are doing, because like everybody is kind of bullish with the price action we have seen here. So now the algo and some other people decide, okay, I want to go down because I want to retrace, I want to collect sell side liquidity, whatever. And then we are starting to see again volume imbalances or gap imbalances. Yeah, this is another gap imbalance, for example. So and look how it's reacting. So for now, it's a trespass area. I mean, I can't make this up, right? I like, I'm a really confident guy and self-confident guy, but like even me, I can't make price do this over and over and over again. I can't. So that would be red here in this case because it's a gap imbalance. So this no trespass, that's what it means. So to go through such an area, we really need power, as we see here. That's not such a candle which is just tipping through it. It's like looking like you need a candle like that to go through such an area. So, but I can't make this up. You know, this is I'm not so. I wish I would be so powerful to move price as I explained it to you, but it's not. Look at this, to the tick, to the tick, to the tick. So it's so much happening, and like to finish the explanation I wanted to give. So when you look at the price legs, what we have, and like you see such a strong move with having no volume imbalance, don't expect price necessarily to come back here, below here, because this is strong. This is a backed up move. This is not a fake move. That's not a Tudor move. That's a real move which is backed up with a lot of participants in the market. And the algo itself, the SLP algo, he needs to find the backup from the bigger participants, because else price would just like circulate around one point, go up, go down, and then returns to the median. So the algo needs the other participants, the big participants, find it to one direction. That's literally what the algo from liquidity provider is doing every day. It's like a radar system. It's pinging, 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 and see where he finds support for the direction he wants to go in. Once he finds this support, like he's keep on going into this direction till he thinks, and the data are telling him, okay, now would be a time to reverse. Yeah, like you can see this everywhere. Like I have a chart here. Um, I don't know. I think I moved in, but like you could draw out all the volume imbalance, and you will get these clusters here. You'll find this also in study, um, and you can see how perfectly um, they overlay and then give you like I call it like a heat map of volume imbalance. This is not correct because I did something else in this chart, so I accidentally moved some of them. But we can do this quick together, and you will see what I mean. So the SPX has more holes because it's looking like a Swiss cheese, because simply this is only from 9:30 to 4 p.m. So it's not doing the movement. So let's say we have a big one over here, that's a gap. We have one over here. And look, this is the first example already, yeah? So look at this one. That's a volume imbalance, but we leave them all the same color now. Look where we are right now, where the high was and all of this stuff. So we have another one over here now. You just keep drawing them out, and then you will end up with having a nice heat map with overlaying volume imbalances. And then you keep on drawing, like you can draw them all out, and then it looks like that in the 5-minute chart. So now look at this. Look at this. Look at where we're opening. Look at the rejection here. Look at this. Look at this. Look where we're bouncing in between. Look at rejection candles here. Take in, immediately retake in, tuck, bounce. So much stuff in there. So, and like, remember, I just took the daily chart and just drew out all of them. So if you do this properly, you will get really a heat map, and you see how price is reacting to it. So that's another one where you can use higher time frame stuff and volume imbalance. And like, they are important, they are staying important. Are volume imbalances more important than fair value gaps? Okay, how to say that? Like, fair value gaps are only important if you know the direction. So because like a fair value gap itself is not really a magnet to price. So the fair value gap comes in handy when you know in which direction you want to trade. Because like just based on what you see here, we have a fair value gap to the downside, which now turns into a bearish price range and all of this stuff. So if you don't know in which direction you want to trade, I think fair value gaps are quite useless in my view, because like you have to understand which fair value gap to take and in which direction, because like fair value gaps you have a lot, while imbalances, they are very easy to handle and they're really magnetic, as you can see. So literally they it's happening 85% of the time. Within a session, these imbalances get filled. While fair value gap is just something where you really need to understand which one you are taking and in which direction. Because they're happening in all directions. While the imbalances, it doesn't matter which bias you have, as you see, even down and up, they almost all the time getting filled. How long do you keep the DR, IDR levels on your chart? Do you start over each week? Like literally, if I look at price, what I'm doing is this. So my chart looks like that. I see volume imbalances and everything, and I have my DR levels over here, only the RDR levels. So I can see them. I'm not drawing them out or something. That's just something I'm doing for you guys right now, so that I can visualize it, what I'm looking at. But like for me, that's how my chart looks always. So I have all the DR levels from the past over here, but just like that. So I'm not drawing out all the lines. I just I just see them and know where they are, as you can see. So literally you could replicate this one. I mean, the next version of the indicator will have also the same DR levels like I have here. And then you will have it also. But for now, you could just like, all what you have to do is draw your RDR levels every RDR session. So this RDR, and then you leave it like that, and you put it till 8:30 before the next one is missing. Then your chart looks the same like mine. And that's enough for me. I don't need more information. But if it helps you, I mean, there is no harm, like when you say, okay, at least the day before or the Monday session, I draw the lines so that I see these levels till you really come really so trained with the system that you don't need it anymore. And I start my day normally, like what I'm looking at is the 30 minutes chart, and there I also have all my levels. So the 30 minutes is giving me the overview about, I don't need the DR levels necessarily. So you can turn them off when you don't have them. So I'm looking like this when the day starts like that. I'm looking at this one, but I always have my DR levels over here. Okay. I am from Germany. Once it's done, like there's so much more I want to do for version 2, so once it's done, but like we will update the version 1 script, at least that you get the standard deviation levels, which is the important stuff. If you have this stats window, which I have, this is not really important in my opinion when it comes to trading. If you see the statistics here or not, that's not make or break your trades. This is just like a nice feature. There is other stuff I want to incorporate. So version 2 definitely will take a little bit longer. Before. Why I longed before 10:30? I just explained it. I don't want to go over that again because, like I said, like if you look at DR, what I gave to you, like imagine it's like the trading for dummies. So I give you a rule which you can follow. So if you don't understand what I was talking about the whole live trading session here, it's better to learn like I told you in the first video. Before 10:30, don't take a trade. Taking trades like this is more like part 2 and part 3 of my video series. Understanding the correlation between the models. But like if you only look at the first video, then you don't take a trade. But like that's like, it's like I put a Ferrari in front of your door, but I removed the engine, but it's a Ferrari, right? So you can sit in the Ferrari, you can have a good time, it's looking good, but like it's getting interesting when you put the engine inside, and this is like part 2 and part 3. Doesn't mean that just simple trading DR sessions, it's a very profitable thing. But like if you really want to step up and you really want to become an exponential good trader, but you wouldn't ask me this question because like I know people who are really interested and who are really knowing what they are doing, they are already doing this. It takes some time to study and to understand, but like you would not ask me this question if you're at like an advanced level of understanding of DR. Elite trader funding, like me, if this question was for me, no, I'm not doing any funded accounts. My opinion about them is, yeah, use them to get some money out and build your own real money account. That's my opinion. Zero relationship RDR on part 4. Yes, relationship will be in part 4 of the video series. Anything else interesting? Yeah, you can look at the 5-minute chart too, but like it's for me, it's more visual. The tick grid is more visual for me in the 1-minute chart. Can have a look back again. So the 5-minute is the same, like it's telling you also like where it is, but I prefer the 1-minute chart. But it's working on the 5-minute, yeah, you can use it. Same principle. Where I can put my stop loss. The stop loss, too many videos where I talk about how to place your stop loss. It's like literally all the live streams, the backtesting live stream, for example, I'm very in detail where I put my stop loss and why I put them there. True, false day. So like this, in part 3 of the DR IDR, what is false and true day meaning? What is this referring to? It's like the statistic you see, I'm talking about 88% for the DR. So that means it's not a 100% model. So out of 100 days, 88 days it's most likely to work, and 12 days it's gonna be not working. So the 88 days are the true days where the rule is true, and the 12 days, that's our false days where the rule is not true. So it means we are breaking to both sides of the DR. Thank you. Okay, guys. I'm using interactive brokers in US. That's like the broker I'm with over 20 years. I'm very happy with them. Only their software is really, really 80s. So if you want to have a broker with a good software, like Traders Workstation from Interactive Brokers it is very good. It has a lot of functionality, but it looks like it was stolen in the 80s somewhere. But it's good. But I know a lot of people who are saying they are not going with interactive brokers because they don't like the software. I use it for 20 years, so I don't mind it. But like in terms of price, order routing, execution speed, the algorithms, what you have to place your orders with, it's very good. It's, in my opinion, one of the best retail brokers you can get in US. Now I'm not using like I can't use like I tested the plugin. There is a plugin for where I can see this. I think that they have a plugin for interactive brokers and TradingView, but I tested it and it was a little bit buggy. It's like I can't set up the order routing and the algorithm I want to have for my order. So anyway, I can't use it. But for a normal account, like let's say up to 10 million, you could just simply use the plugin. But like you have to test it. When I was testing it, there was some delay and some order rejections, which I don't like. When it comes to order execution, I normally never use plugins for software. So I always execute directly in the broker software because Doesn't matter if you have a 10,000 account, if something goes wrong with the API to your trading software and the order is not getting in, you're losing money or you're not making enough money. So that's why I would not use a plugin for IB, at least till I really can be sure that it's 100% correct. What about confirmation long percentage? Yeah, Marco, what about you watch the videos? If you ask me what is confirmation long percentage, it means on how many days the confirmation of the DR was into the long direction. No, like when I'm talking about 10 millions, it's not a show off, but like just do the math by yourself in your head. Like if you would have a 10 million account, it means you would trade $100,000 risk. So depending on your stop order placement, you can end up like, let's say you're trading 100 contracts. So once you're trading 100 ES contracts, you don't want to just flush them in the market or put a normal limit order wherever you want to buy, because there are sharks waiting for your orders. So you want to mask your order. You want to use an iceberg algorithm to split your 100 contracts that they look like it's one contract at this level, for example. And for that one, you need to use advanced order routing, or you don't want to route it directly to the SIP. So you want to route it directly to one particular exchange and all of this stuff, or you want to route it directly to the exchange which has the best price. And that's all order execution algorithms which IB offers and the advanced brokerages. And that's why I'm saying the bigger your account is getting, the more impact, or like the more you have to look how you get into the market. So sometimes I'm trading 500, 800 contracts. So I need to make sure that I'm getting a good execution. And that's why I'm talking about the millions, not to say something that's why I'm saying once you have a bigger account, you have to consider that also important, how you get your orders into the market. Okay, may I know in the range of IDR closing above and below after session, how would we know the direction? Range expansion, it's normally going into both directions. So it's like in 80% of when you see this model, it's gonna go into both directions. So you're just literally looking for buy-side liquidity, sell-side liquidity taken, and then you know that most likely will go. And then you look at levels where you want to enter. But there is not really a direction in a range expansion day. As you can see today in Euro USD. So we're having a slight, like if you look at everything what is happening here, we are literally doing this. So there is not a direction. It's just like sweep, 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 sweep. But at the end of the day, I wouldn't be surprised, or like we are not surprised that we are right now in the middle where we started, right? So that's our ADR session, and look where price is. So all of this noise just to come back to the middle. I don't know max drawdown. I'm not looking at this because I don't know. I just did like in reality, if you really understand the concept, you should not have any drawdowns. I mean, you can have like drawdowns in like, you can have a day with -3, you can have a day with -4R, but like technically, maybe you're stochastic, you're unlucky, and you're having 2 days in a row if you're not like. But for me, it's happening very, very. It's almost not happening to me. I have days where I break even or -1, but like they are the exception, not the rule for me. So like I can't tell you like a drawdown because I don't know. If I say 10%, yeah, let's say max, like I would guess around 10%. But like you can't ask for a drawdown because at the end of the day it depends on, like if you're just picky trading and you just come the last hour of the ODR and you want to take a trade and you only do this 3 times a week and you say you don't trade on Monday and you don't trade on Friday because that's days you don't like. It depends a lot on, I would say if you trade every day, if you trade at least 2 sessions and you take everything into consideration, I have a hard time considering a weekly drawdown. I don't remember a week except the flash crash week for me personally, where I had a weekly drawdown. So like break even, I have days where I'm like ending up, I make 10R, but my target is never getting reached and I'm getting stopped out and I end the day with -1. Yeah, that's happening. But like really drawdown, bad ones, no, I don't see them. Okay, so that's it for today. I hope you enjoyed it. I hope you like it. And thank you very much. And yeah, let's see. Like, if we don't hear each other before Christmas, I wish you a wonderful Christmas with your families and your loved ones. Enjoy the time. And the latest we hear each other again will be after Christmas because there will be another live stream. And else, join the Discord, sub if you have not subbed, and stay healthy, stay safe, and enjoy the coming days with your family and your loved ones. Thank you guys. Bye bye. Just because I see it, thank you very much for the, I don't know even how it's called, thank you chats. Like, I will make sure that this money reaches people who needs them. So I very much appreciate the gesture, lovely. And be sure that money will go to people who need it, like kids. That's what I like. And thank you. Thank you, everyone.